Hi, I'm John Hutchinson, and welcome to RedirectMyTaxes.com. So who am I and what do I do? Well, when I'm not shooting videos, I'm part owner in an independent boutique financial planning firm specializing in working with business owners and affluent families. We take a special emphasis with planning because taxes can erode anywhere from a quarter to half your ongoing wealth building efforts. I'm also part owner in an independent insurance agency where we can represent most any major carrier, but we're not allegiant to any of them. Here's why I put this course together. As a business owner myself, I know firsthand about the exorbitant amount of taxes being paid by the wealth creators of this country. Second of all, I know by default, business owners focus on their business and don't really engage into planning until it's out of a reaction to something, which oftentimes is too late. And third, our firm has a unique ability to take some big institutional thinking and bring it down to the most underserved market, small business owners of America. Let's talk about the problems upon problems with paying taxes. One is you pay taxes on your income. Next, you pay taxes on any growth. Then you pay taxes on what you buy. And if you make too much money while you're alive, you're going to pay taxes when you die. Unfortunately, these problems aren't going to be going away anytime soon. And it really doesn't matter who gets into office going forward because the damage has already been done. Even if we just look at our obligations to Social Security, Medicare, and federal pensions, there's already too many people collecting or set to be collecting and not enough workers funding the kitty. And these obligations are 7 times more than even just income security programs, things like food stamps, welfare, rent control, everything else. And they're almost 4 times more than defense spending. Future elected officials will have to tax the public for the shortfall going forward. Thankfully, though, right now there's opportunities in the tax code that I find either people aren't taking full advantage of, or maybe they're just not knowledgeable about them at all. On the business side of the fence, since business does a lot to spur the economy and create jobs, create other tax-paying individuals, there's a number of opportunities for business owners since in the eyes of the government it creates a social good. On the individual side, since paying taxes is almost like involuntary philanthropy, if you're proactive about your philanthropy, you can create tax breaks for yourself and have some say as to where those social dollars go. And all of this is deemed as a win-win for the government. If you're a wealth creator in this country, here's the opportunity and the vision I want you to hold as you go through this course. Just what if you could avoid, defer, and or possibly shelter taxation using all these wonderful opportunities in the tax code? And what if by doing so, you could compile substantial reserves to fortify your own retirement and your family's estate plan? And what if you had some say as to where your tax dollars actually went? What if you could pick and choose the causes that meant something to you and divert dollars, redirect dollars to those causes? Now, if you're a business owner, you're lucky because there happens to be a lot more tax planning tools in the toolbox for you. And these are the types of business owners where these strategies resonate most with. So if you're a business owner who cares about your employees, there's a number of opportunities where you can help yourself because you're helping them. And also, if you want to grow your business, there's definitely incentives in the tax code because the government wants to be part of that ride. And last, if someday you want to exit your business in style, there's definitely some foundational pieces that you're going to want to start looking at now to create the most tax efficient result in the long run. Now, if you're not a business owner, that's okay too. I can definitely help individuals. And here's who I help the best. I call them Henrys or Amy's. Now, a Henry is somebody who is a high earner, but not rich yet. And that's okay. We can do something about that. Amy's are somebody who are already affluent and married individuals. Now, I find that this helps. It's not totally necessary, but if you're okay being philanthropic, the magnitude of the planning that we can do, you'll find will be much greater than if you're not. I've also found that once people see the impact that this planning can have, they suddenly become a little more philanthropic. Let's talk about some of the expensive myths, and I say they're expensive because they're myths that keep people from exploring or going down this road of planning that could help them redirect 6 or 7 figures of tax dollars every year. So number one by far is I have a blank who handles that. And by blank, I mean financial planner or attorney or accountant. And although you may have these people in your life already, they don't have a monopoly on good ideas. And often, I use this analogy of the cruise ship. So if you think of the full spectrum of planning that's available, it's like being at the top of a cruise ship looking around at this beautiful panoramic view. However, each professional is sitting in their cabin looking out the porthole of the tasks that they've been assigned to tackle. Now, what works best for clients is when the three of these professionals are in communication with each other, alerting each other to opportunities, and help each other guard against any pitfalls or challenges that come with those opportunities. But to say that you already have someone in this degree, you might be costing yourself money. Now, the second is, I already have or do X. And X being a type of plan. Maybe you're already doing something for your employees at work. Maybe you're already participating in some charitable giving. But again, to what degree and with what advice from whom? So rather than say, I'm already doing that, it's much more powerful to say, what's out there and how could it be working in conjunction? How can the two be complementing each other to create a more powerful result? And last, I've already looked into blank. It's the same as before. You may have looked into it. Somebody may have said, hey, this doesn't work, but I would encourage you as you're going through this video to have an open mind and then to seek out a custom consultation to see how this can work in your life. Here's yet another expensive myth that I hear quite often, and that would be, is all of this really worth the hassle? And really, you need to be the judge of that. When we're talking about 6 to 7 figures of redirected tax dollars, maybe it's worth a little extra effort in your life. Now, I will tell you a story of somebody you've undoubtedly heard of who didn't feel like it was worth the hassle, and that would be Elvis Presley and his manager. Now, his father was really afraid of the IRS and his son going to jail, so much so that they did not even engage any planners or even an accounting firm. What they did is they would just get all of their data each and every year, send it to the IRS and say, how much do we owe, and then stroke a check for the tax. Now, unfortunately, taxes during Elvis's pinnacle of his fame were the highest they've ever been. And so what happened was he would only make one hit movie or one hit record every year, since he found that most of his efforts were just going straight to taxes. Unfortunately, there was a number of deductions available to business owners that they could have been taking advantage of if it was worth the hassle, but they chose not to. And the really sad part of this story is, even after paying taxes so inefficiently throughout his life, when Elvis passed away, the first thing the IRS did was come right back to his estate and tax him some more. So again, when we're talking about 20 to 40% of your income being redirected, you need to decide if this is really worth the hassle or not. Although to this point, you've probably only been employing common techniques to help with a very uncommon problem, the purpose of this slide is to prove to you that your situation is uncommon. Your income is uncommon. The amount of tax you're paying is uncommon. If you're a business owner, that by itself is uncommon. But all the data that we're going to look at is compiled from a very comprehensive study done in 2010 about the level of income people were making and the amount of tax that those groups were paying. So in 2010, the top 10% of all income earners made $116,000 or more married filing jointly. So although this is a few years back, it's not that far back. $116,000 doesn't really seem like a lot of money. To be in the top 5% of all income earners, you only needed to be making $161,000 or more. Now, if you're making this kind of income, you probably don't feel like an elite. But remember, this is an average based on everybody in the country. Now, to be in the top 1%, and we hear a lot about these top 1%ers, and when I ask people what this number is, they're usually thinking of a really big number. They only need to be making over $369,000 to be in the top 1% of all income earners in the United States. So if we look at how much taxes they ended up paying, the top 1% paid over a third of all federal taxes in the United States. The top 5% and above, including this 1%, almost 60% of all the taxes paid. And this very elite group of 10% and above, over 70% of all the taxes paid in America. So again, when you're thinking about if this is complicated or if it's worth it, look at how much of the burden is falling on you as a taxpayer and decide, do I need to be doing something more? Do I need to be taking common advice from common planners? Or do I need to see what else is out there? Probably the number one challenge to anybody getting started with tax planning is finding the money. Show me the money. So we all know that cash flow is king, but if you think about it this way, if you do nothing at all, somewhere in the neighborhood of 35 to 50% of that money is going to be gone anyway in the form of taxes. That can be a good mental start to coming up with some seed money for some of the programs that we're going to discuss in the future videos. Also, some of the business programs don't need to be funded in the tax year in question. So they can be funded in the next year as long as they're committed to in writing in this year. Now, some of the business and individual programs can be financed. And a lot of times that helps to ease the initial burden, especially when people know that cash flow is coming in from either income or some sort of liquidity event in the future. And last, some of the strategies allow for access and loans. So if clients know they're going to need that money, there is a certain amount of, I call them escape hatches, allowing them to tap into that money to use to fund their business or whatever they need it for. So there's going to be a homework piece available to you at the end of this video. And what it's designed to do is to help you confront the amount of money that's set to be wasted right now if you do nothing. And what if we could just redirect even just a portion of that? And what we're going to do is take that figure and send it through time with a very conservative growth rate and see the true value of those lost tax dollars. And I want you to just think of the impact that that could have on your family and or maybe these causes that you really care about. Throughout this video series, we're obviously going to be focusing most of our time on tax planning. However, what you're going to find is a lot of the strategies discussed will also help to optimize things like retirement planning, business exit planning, as well as proper estate planning. And quite frankly, all of them should go hand in hand anyway. Now, in the last video, we're going to discuss the threat of future higher taxes and a complementary strategy that you can layer in now that will help buffer against those future higher taxes later. And for a lot of our families, the threat of lawsuit can be equally as scary as the threat of tax erosion. And what you're going to find is these strategies help them from an asset protection standpoint. And last, we're going to see how some of the strategies discussed can really help future generations cement family values and also to promote the stewardship of money concept. Where do you go from here? Well, if you're a business owner, you're going to want to click to the left. As a business owner, I know your business comes first, so we got right to the heart of the matter and put the business programs first for you. Now, if you're an individual and you don't own a business, I don't want to waste your time, so click to the right to skip the business sponsor programs. And don't forget to post your comments and questions below. A lot of people might have the same questions and it really helps the whole community, and I do my best to get to them as quick as possible. And also, if you don't feel like watching a few more videos, feel free to just press the button below and schedule a complimentary consultation. Thanks a lot for visiting redirectmytaxes.com, and we'll see you soon.